Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. We have a great panel for you this evening to kick off week two of 2026. A lot to discuss. A lot of information out over the weekend with respect to the Trump tweets in housing and a variety of other places. Some Iranian news, some Venezuelan news, some Greenland news. Plenty going on, but let's take a first look at futures here. Opening a little bit weaker. Nasdaq down 6, S&P's down 3 handles to 7,001. Crude a little bit softer. Gold up 58 basis points to 45.26. Bonds are largely flat. Dollar a touch stronger. Quiet again to start the week, but we'll see how the week progresses. I have a great panel with me, as always, joining. Back in the seat in Chicago is Pax. I have Pharm in here checking in from Arizona, and Sara from Southwest Florida as well. How is everybody doing this evening?
Miserable. I was yesterday afternoon. I was on the beach, man. I was on a white sandy beach looking at turquoise blue water, and I'm looking at gray skies back in Chicago with drizzly snow. A dog that can't stop shivering because she was gone for 2 weeks by herself. I feel so bad. I feel so guilty. But I'm happy to be here with you guys, and I'm happy to be back at my desk, and I'm looking forward to trading this week.
Pax, if you say this is a bearish open, I'm going to fly out there, and I'm going to throw a flaming bag of dog shit at your front door. So just zip it.
But it's a bearish open.
No. Hold on, I gotta get lower. Hold on, here I come. Fuck.
First thing I saw. This is a bearish open.
Of course it was. No.
First thing the opening print was 70.07. High is 08.5, and it sold off immediately. I tried to sell it at 06, but I wasn't signed in.
That's low night on NASDAQ, everybody. 869. Did they hit it 869? 870. Yeah, Pax did it. Blame Pax Bears. I'm flying out.
Here we go. That'll be awesome. Fuck, that'd be great. If nobody sees me in Pharm for a few days, you know that I took him to Keegan's. We started drinking and singing Irish songs.
Sounds like a lot of fun.
Well, we had an action-packed week last week, first full trading week of the year. Plenty to go through and happened, and markets were largely constructive, but I don't know. I saw something subtle change out of the administration, and Trump decided to get back involved in markets, it seemed, at least on a sector basis. A couple tweets about housing, some tweets about defense, and then Friday after the close, a tweet to cap interest rates on credit cards at 10%. So, look, I think the administration, and Trump specifically, is getting a little more concerned about falling popularity and polling data, and is trying to address affordability, and realizes that's going to be an issue for him come November. And so I don't know. I feel like he's starting to introduce volatility back into markets after months and months of selling volatility. So will be interesting to see how that transpires this week. For all of you who are new to the Sunday Open, what we like to do is go around the horn, take a look at the different asset classes, different futures markets. So please, if you want to chat with us, subscribe to the channel. We can answer questions as we go. But I want to kick it over first to Sara. Love looking at your charts to start the week, particularly that 4-up chart there with the S&P, NASDAQ, Russell, and Dow all together. I think it gives a good perspective for how there it is. What are you seeing as we start full trading week, second trading week of the year?
What's up, everybody? We are going to talk about oil first because it's going to move first. So ES, NQ, RTY, the Dow, they're all inside yesterday's range, so nothing too crazy there to talk about right now. But if oil can trigger this 4-hour up, we can trigger the week up. And oil had an amazing broadening formation last week. Oh, Bitcoin's puking. We had a low, a high, a new low, a new high, a new low, and then we just made a new high. So I'm wanting this to expand, especially because we took out that 55 level that we were talking about for months and months and months. That was the downside target. So that was a great place to be buying. And now we've got quite the possibility for a big upside move in oil with multiple time frames triggering one another. This is what we call a domino effect trade, where we can have the weekly trigger the monthly, which can trigger the quarterly. So since we took out the lows, like now I'm bullish on oil. And if we can trigger this, here, let me delete the squiggly line now because now it looks funny. But if we can trigger above last week's highs today, we have what we call a pivot machine gun, which is just going to trigger like all these stops in here, and price should blast through here pretty quickly. So step one is we need to break above that last 4-hour high, which we're about to do. That's why I said in the chat, get ready for oil uppies. Oh, nope, I didn't hit enter. There it is. So I'm waiting for that. So that's cool there. So I think oil should be moving here shortly. Let me put an alert on that. And then I already have one on the week. All right. So like I said, the futures, they're all opening inside day and inside last week's range. So nothing too exciting there. Nowhere near taking out yesterday's lows, or Friday's lows. Nowhere near doing anything yet. We are closer to more like taking the week up rather than down. So we shall see. And then the cool thing about NQ is it is weaker because it's not at all-time highs, but it does have a monthly setup. Because last month we were an inside month, the whole month. This month we've opened, we're green. So if we can trigger above last month's highs, this would just be an inside bar reversal. And then we would target new all-time highs for NQ. And then, like I said, all the other ones are pretty much at all-time highs. They're boring. I don't like trading when they're up there. There's no targets up there. Unless we get like a big short, then I would be excited to trade that, but I'm not excited to trade higher on any of those. So oil looks the best to me, unless I haven't even looked at gold and silver yet.
So I'm curious just on your, flipping to oil first. Are you thinking that oil moving higher impacts equities, or are you just thinking oil moving higher isn't interesting from an oil perspective? Because a lot of times I like to look at cross asset, try to get signals from what the bond market's doing, what's oil doing, what's FX doing as an indication for where I think equities may go. But lately we've been seeing U.S. equities kind of march to the beat of their own drum to a large degree. How are you thinking about that?
I don't like look for clues in things. Like I won't look at the VIX to be like, what is, the future is going to do, because all we need to know is what we're looking at right now. So we don't look for clues and correlations like that. We do look for correlations, but not like as far as clues and like where we think something's going to go. We just let the charts tell us. So there's step one with oil. We just took the 4-hour high. So now the target is to get up there, which will trigger the weekly participants, and then the monthly. And then, like we said, all these stops through here, like price should move through there like pretty quickly. Like it could probably happen, overnight or tomorrow even. Let's go to gold. Gold is still trying to just go to all-time highs.
4604. Next stop in gold.
4604. We should get our PAX level then. I always draw your levels on the chart.
Yeah, look, I think clearly what the market seems like it's reacting to at the onset here, 8 minutes in, is probably some increased rhetoric out of the Middle East with some of the Iranian stuff going on and some of the protests there, and whether or not the U.S. is going to get involved in Iran again. You have stronger oil, stronger gold, stronger precious. Broadly, bonds a little softer, equities a little softer, and the dollar a little bit stronger. I think across the board that would be a rising geopolitical type dynamic. We also have the Venezuela news back and forth, there with the administration taking Maduro out last week. And Trump had CEOs into the White House on Friday and tried to strong arm them into making capital decisions and helping to restore production in Venezuela. And I don't think that went as exactly as planned. I mean, you heard the Exxon CEO basically come out and say, we've lost a lot of money in Venezuela and we don't intend to do that again. And so I don't think that's necessarily going to go as easy as the administration thinks. Although over the weekend, Energy Secretary Wright said, look for the U.S. government to take stakes in U.S. oil companies. So moving in the similar direction to what we've already seen with the U.S. taking stakes in semiconductors and rare earth companies and the like. And so But yeah, it seems like the geopolitical stuff is starting to resonate a little bit more with investors as we move into as we move through January. I don't know. It's this open here is a little bit mixed. Pharm, let's kick it over to you here, quick for equities and your equity charts. What are you seeing here? Let's maybe start with minis and kind of how are you thinking about the week and what is it? What are we thinking?
Yeah, I've got NQ. You want to start with ES first?
Yeah, either one.
I really think it dry. I'll just do quick on NQ. See that 869 spot held, and it's up quite a bit from then. So I'm not happy. I'm kidding, but I'm not. To me, I mean, NQ is fine. It still is holding below that RTH gap from November 3rd into November 4th, which is interesting. So it had that gap down. It has still not revisited that. It's very, very close. It certainly looks reasonably strong, and it's the first like real strength we've seen at times. There was an absolutely fantastic buyer last week in the 600s. And that's the first time I would say, both on ES and NQ, something that's definitely in the bulls column now as we have sort of been battling for this multi-month breakout on ES anyways, is that, I mean, it's the first time I've seen size come into on the buy side on ES. And it was basically in the 69.40, 69.50s, NQs, right around the 600 range, 580s. Definitely some legitimate size. I think as long as, we don't start giving back, Friday's low is like almost range of the week. Really on NQ in particular, to a lesser extent, ES. But as long as we're not giving back last week lows, it's probably okay. I don't think on NQ you want to lose 700 though. This is kind of 704, 726. You don't want to get in the meat of last week's distribution. I'll just point out this. I thought it was interesting. I posted it on X, and I'll move to ES, and we can move on here. If you look at the volume profile on NQ from this past week, and you just like flipped it upside down, it's pretty much the profile from the trailing week, the week before, which is interesting. And we talked about, how lack of volume build, lower during that trailing week, runs the risk of these, snapback rallies, which obviously we saw in that case. But at the same time, the flip side, it says that like, okay, well, sellers had initiated a good location, buyers at poor. So now it's the exact opposite. And I will say that bulls tend to get away with this, a lot more often than bears do. And there was more volume relative to the last week. But I thought that was kind of interesting, a nice little mirror image on NQ. Yes, again, like we've talked about this and talked about, step by step, what would need to happen with this multi-month balance range that we've been in, because we keep making these nominal new highs and then shit in the bed, and then we make a nominal new high and then shit the bed. And it looks a little better this time. I mean, it's still, we saw that, initial failed break of 69.94 lead to some serious weakness. And so we had talked about that possibility. Obviously, sellers needed to take out a prior day's low would be step 2. They did that on a gap down, which is less than ideal. They basically hit the target for the day overnight, so there really wasn't anywhere to go. And then step 3 would have been to break a multi-day balance range to the downside. That they failed to do, and Friday was, to the upside. And again, I want to say that, there was a really, really aggressive buyer in the 69.40s on Tuesday. Moved up into the 50s and even the 60s on Friday, basically trapped here in the 60s and actually kind of soaked just a huge seller in the 60s. And then on this exhaustive push through, which left a nice excess low, like it's the last thing you want to see if you're a seller is an excess low near the top of this range. Excess low suggesting that don't want to go lower, right? So that's not really what sellers want to see. That said, we still have not made a convincing breakaway from the 69.94. I mean, look, we just came down to it, wicked a little bit below it, and we're still flirting with this. So it's not like game over for sellers, at all here. But they flopped last week completely and objectively, and we did see some strength from buyers, which we had not seen anywhere near this kind of range high. So that was new and welcome if you are bullish. And so to me, it's going to be all about last week's low. If that's given back, like whatever pattern you have on your chart is going to be broken. I'm not a pattern trader, but pretty much all of them would be in trouble on that. But short of that, and Pax has talked about this, if we're really sustaining this break to the upside, then it's longs until proven wrong to some pretty significant upside extension. So we'll see if something changes this week. But so far, bulls are okay and safe.
Yeah. What I noticed last week, each day it seemed like there was different leadership, right? We had kind of, one day, at least on Monday after last week's attack in Venezuela, energy was bid on Monday. Then the next day tech was bid, and then the following day tech was underperforming and IWM was bid. But thematically, what we've definitely seen is a rotation of capital out of Mag 7 into other things, right? To start the year, Apple's down 4.5%. Microsoft's down 90 basis points. NVIDIA's down 90 basis points. And then if I look at some of the best performing sectors, you have metal stocks up 13%, OIH, which is oil services, up 12%. Home builders are up 10% after some of the better housing news over the throughout the course of the week. Materials are up 6.5%, and IWM, we didn't talk about the Russell, but up 6% during at least to start the year. So there's clearly been some rotation out of Mag 7 into other areas of the market. And the question that I'm wrestling with mentally is this a real move? Is this a real broadening out rally based on an economy that is getting better? Or is this positioning to start the year as folks get back to their desk and are looking to maybe sell winners from last year and reallocate capital? I don't know yet. I mean, the labor data that came out on Friday wasn't particularly great on the payroll print. It was a little bit maybe better than expected. On the unemployment rate ticking down to 4.4%. But really, the labor market is not particularly robust. However, the front end in the bond market, yields moved higher. So we did price out some interest rate cuts. I mean, January is largely off the table at this point. I mean, we do get the CPI on Tuesday this week, but really, given the government shutdown, the data is a little bit sloppy. And so I don't think this is such a big data point. It's likely to come in weaker than expected. We do have a potential for a Supreme Court ruling on tariffs on Wednesday morning. That was, in theory, supposed to come Friday, but was delayed. And now another opinion is possible on Wednesday. Could be delayed again. We're not really sure. The Supreme Court does what the Supreme Court wants to do, but Wednesday could be a pretty interesting day. And it's not VIX expiry. VIX expiry is next week, but regular expiry is this Friday. So a lot of potential volume. And then we also have the kickoff of earnings season this week with JP Morgan on Tuesday, the rest of the big banks on Wednesday. And then as we kind of push through the rest of the month, we'll get a real read on fourth quarter strength and earnings, and whether or not we can get the earnings leg of this economy to continue to help propel equities higher as we push through to start 2026. But Pax, you're back in the seat. You're back in front of the screens. You were watching last week, but not trading. What are you seeing as you get back and see the action this morning and have a better look at, let's say, what you missed, even though I know you didn't miss much? What are you thinking here to start 2026?
I don't know. I'm going to watch the reopen for today. And then, I'm going to watch the opening tomorrow for the indices. I haven't traded the indices in a monthish, like a week before Christmas, 2 weeks before Christmas, maybe. I caught some gold and not gold. I caught some silver and some crude at the end of the year. I got stopped out of my last two crude, kind of crappy, but at least in light of this rally, I was long crude from 55.10. And but some silver, and silver and gold are the story. So I've been gone for 2 weeks. I haven't traded before Christmas. So when I do that, I come sliding back in nice and slow. I am not going to, trade my ass off tomorrow. I will, if there's something to do and it's easy and it's manageable according to my guidelines and rules, then I'll do it. But if not, I'm just going to look for the market to set up. So, I mean, I have not made it. I made this point on Twitter last week. I have not made us look at gold as, silver. Silver, we can see silver trade up to that high, last year's high. What day was that? That was Sunday, right? That was Sunday night when we were on here at 82.65. We'll see that. We can see that in the show. It's only $1 away. So anyway, here's the point. The point that I'm trying to make is that, I have not made it a secret as to, my feeling for the market, overall feeling for the market, I think is very bearish. And the fact that Pharm has kind of shifted his tenor to being bullish makes me even want to more be bearish, only because he's such a bear like I am. So, but, to Pharm's point, which he beautifully said, was the market's rallying, and so we need to be long in spite of our opinions. We have to have a methodology that is consistent, repeatable, and scalable. Consistent, repeatable, and scalable that gives me the ability to be able to trade what the market gives me, not to trade my opinion. I'm not an analyst. I'm a trader. I'm not paid to be right. I'm paid to make money. I'm paid to react to what the market is giving me. So with that said, we are above the prices that we talked about last Sunday when I was staring at the ocean. The yearly opening range is 69.02. Those levels that we talked about, between 69.02 and 69.11, I'm flat. Above 69.11, I'll be long. Now, I made it clear too last week I wasn't trading it because I was in Mexico, but I'll be long to 69.35. Take profit there. Add above it to 69.80. Take profit there. Add above it. And then take profit at 70.26. We stopped at 70.17, I think, on Friday. At above 70, 70.26 to 70.64 on the way up to 71.20, and the swing completes 71.87. But this open is kind of a bearish open, at least for now. If the S&P takes out 70.08, that's the high, right? 70.08 half. My eyes are getting old again. If the S&P will take out 70.08 half, then what looks to be kind of 70.07 is the opening print. The high is 08 half. So if we get above 08 half, then that market, then the S&P is going to trade to, obviously it's going to trade to 70.17, then up to that swing level of 70.26. So that, if we take out that bearish open, then what looks to be a bearish open now becomes even more strongly bullish. But right now, I am going to ease my way into trading. I have destroyed myself by coming back all full of, rested and focused and feeling good and full of vim and vigor. And and get my ass kicked, especially after spending a bunch of money. Here's a general rule of thumb for all of you traders. If you buy a new car, take a week off. If you buy a house, take 2 weeks off. If you go on vacation, ease your way back into trading, because you're going to have whatever you spent on that car, on that house, for that diamond, for that watch, whatever big expenditure you have, you're going to have that number on your mind. If you take your family to an expensive place for 2 weeks, and and your in-laws at the same time, and fly everybody nicely, you're going to have that tag on your mind too. So I'm going to take it easy tomorrow. And if there is something easy to do, I will do it. I am not going to push my ass into a negative mindset, so that when CPI comes out Tuesday, and we do have decent price action, I can be focused on what the market gives me and not on my result. I do not ever want to focus on my P&L. I don't ever want to focus on my result. I want to focus on my process, consistent, repeatable, and scalable, and what the market and the rules and the guidelines that's given me, so that I can go ahead and I can take the trades that are easy to manage and that are easy to make money in. Every day as a trader should feel like you're cheating life. Every day as a trader should feel like you're cheating life. Otherwise, you're not doing it right.
Seems like for the last several weeks, I'm just looking here at the tape as we're 23 minutes in, and S&Ps are basically right at 7,000, down touch, and NASDAQ down 37 handles. Bonds a little bit weaker, dollar a little bit stronger. Crude's up 75 basis points. And what I was going to say is, it seems like every week that we speak, gold and silver and precious are the big mover, right? And it's again this morning, this evening, gold up about 1%, silver up 2.5%, palladium up 2%, platinum up 2%. Maybe Sara, let's shift to your just back. I think you got the gold chart there, but let's just go to gold. The story in gold, we've been talking about it on the morning show. We've been talking about it for months. Thematics in gold. And the price action now has been firm. The geopolitical is picking up. The Iranian stuff, the Venezuela stuff. What are the charts telling you?
All-time highs. That's it.
That's it.
That's where they're going. Yeah.
And then when? And then where? Or for how long?
Oh, then I don't know. Then I don't pretend. That probably still higher, but I
Wait,
don't have any
Are we talking about
concrete
gold?
targets.
Yeah, gold.
Yeah.
Gold. Yeah.
Gold. If gold can get a gold,
Access 4604.
4604 is just a swing. Yeah, but that's the next level. Gold's going to like, I don't know, 5,400. Above 4,400, it's got like another $1,000 in it, $800 to $1,000. Silver's going to who the hell knows where silver's going. That ain't going lower. To Sarah's point.
No, that's also gone to a new all-time high this week.
Mm-hmm.
Or maybe while we're on here.
Yeah. Could be now.
I mean, the narrative is firm, right? I mean, you have with the geopolitical dynamics in place, it's another reason for folks to think about gold as a store of value. Plus, the Trump administration is making aggressive moves globally, whether it's in Venezuela, whether it's potentially in Greenland, what it might do in Iran, but also on the capital side, right? Basically what it's saying to in Venezuela is that those who are owed money in Venezuela may not get paid by what the U.S. is doing by taking the oil, right? U.S. is going in there, taking the oil to sell the oil to get the money back to the Venezuelan people, maybe, or to the Treasury for Trump's usage. But there are folks who are owed money from Venezuela, and he's basically saying proceeds from oil sales will not go to those creditors, right? He's making decisions on capital that likely will be concerning for global investors. If you own assets in other areas where the U.S. might have interests, what will happen to those assets? So he's He's continuing his desire to pursue what he describes as the Don Road doctrine, getting more aggressive in our hemisphere here, but he's making it more difficult for foreigners to invest capital in America or in dollar assets. And so I think what we're seeing is, and have been seeing for the last year or so, is a gradual shift out of dollar assets, out of treasuries, and into gold and into silver and into other precious metals, and that dynamic remains firmly in place. So
we started to see that before Trump came in and decided to join the Uniparty. I mean, the dollar has been losing prominence for a long time, and the debasement trade has been, getting stronger and weaker, depending on how you're looking at it. I'm long gold, so, stronger. This whole thing is just crazy. Yeah, I think a huge nail in the coffin was when the Biden administration decided to seize Russia's foreign assets.
Yeah, I mean, back at what really accelerated this move was when Russia went into Ukraine, and we decided to sanction Russian reserves, and Europe did the same thing, and so you really started to see a disconnect there with the gold price moving higher and real rates moving higher. And so typically what you get is gold moves higher when real rates move lower, but what we had was real rates higher and gold higher, and that was this get out of treasuries, get into a different store of value, that dynamic in place. And then more recently with what Trump's done, he's just exacerbated those trends. He's making it more difficult for foreigners to hold dollar assets, because you just don't know if he's going to decide one day to, take them. So, and look, when you're on the other side of, his views, if you're China, or if you're, friends with Iran or friends with Russia, you're thinking, well, are we next? And so that dynamic is in place. It remains firmly in place, and you're seeing it in these all-time high, price aspirations and movements here in gold and silver. So, Pharm, anything to add there on the gold chart or silver chart, or all systems go?
No, I was actually going to ask you a question that you kind of touched on there, and that was pull up silver while we look at it, because I'm curious to see if it's going to break. We've got kind of like a 2-week relative equal high, so it's sort of in this box range here. But I was going to ask you, I mean, I saw something about like gold exports, right? Were up quite a bit, impacting GDP, yada, yada. I mean, what are your thoughts on like why that might be occurring and what that could potentially signal next?
Yeah, I think that was some interesting data out over last week, where the trade deficit in the U.S. fell a decent bit, and the Trump administration talked about how great that was, and also it was a positive contributor to GDP. But close to 15 billion of the 50 billion swing in that was due to gold and silver exports. So I don't know, are we selling the family jewels here? But no, there's clearly a dynamic in place where there's been a pull for both those commodities and all commodities with higher prices abroad than we're seeing, let's say, in Western markets. And so there's also a dynamic in play of physical versus paper contracts, right? And so particularly in silver, I think the paper to physical ratio for silver contracts is over 300 to 1. Paper more than physical. And so as the physical markets have tightened up, China has started to put export restrictions on silver. Other countries are getting more desirous of holding on to their raw materials, right? And so I think this is a resource nationalism play. Geopolitical tensions are more elevated, and I think we're going to see more of this dynamic where there's going to be a premium placed on real physical commodities, right? And we talked about this last week with our guest Luke Groman about why Bitcoin hasn't really participated to the same degree as precious metals have, and I think part of the reason is because Bitcoin isn't necessarily needed for anything, at any particular point in time, except as a store of value. And so, but with respect to silver, let's say for solar trade, for the AI trade, silver is a necessary component, and countries are becoming more cognizant that they need all this material and will pay up for it because it's such a small component of the overall price of, say, an iPhone, or even as it pertains to the AI capex. So we're seeing strong physical demand, and I think that dynamic is going to continue. And so, and the other thing I'd say is flows. Right, we're seeing commodities as an asset class are very underowned, particularly versus equities, particularly versus bonds. And so, small allocations of portfolios moving into hard assets, moving into commodities, have big potential percentage gains, awaiting them. Right, these markets are just a lot smaller, particularly in the equity markets, and so a little bit of and bond markets, and so little shifts out of those asset classes go a long way.
I'm sure you remember last year there was a lot of talk about dollar assets and fleeing the U.S., right, and foreigners selling stock, all that kind of stuff. It didn't last very long, if that's what was going on. But I don't know. I mean, if we're starting to see some movement of assets out of the U.S., and it ultimately ends up putting pressure on the dollar, that impacts foreign returns in U.S. equities. Maybe that's a selling pressure valve. Maybe they don't want to hold those equities. Who knows, right? I mean, so it's a long year, and a lot is going on, and definitely there's a lot of conflict going on, and I could see wanting to pull some assets toward home. So that's something I think worth keeping an eye on. And I just saw that big gold number in terms of exports, and it kind of sniffed just a little bit like that to me. So I appreciate your comments. And then, somebody liked what do you call it? Resource nationalism. I love that. So I love that as well.
Yeah. For me, again, like if I look back to last week, I thought, I don't know, I thought it was an interesting shift in the Trump administration, and Trump specifically, right? We've been talking for months, him basically as a seller of volatility, right? Anytime, markets got any concern, he's there to pump them up. He's there to continue to, talk about how great things are, and there's really no risk, and the Fed's going to cut rates, and he's going to bring in a dovish Fed chair, and he's got everything under control. And then November happens, Republicans lose elections, right? A bit of a mini blue sweep in New York and Virginia and New Jersey. Polling data for the administration is in the toilet, and Trump goes to DC. I think it was early part of last week, maybe it was week. Yeah, it was Monday. Has a meeting with House Republicans, gives a big speech, and is like, "Why do we suck in the polls?" And so after that, he comes out with the housing tweet to remove institutional buyers from the housing markets. He also says that Fannie and Freddie Mae are going to be buying now $200 billion worth of mortgages, trying to lower overall mortgage costs for consumers. Then he talks about defense companies and how we should cap defense company CEO pay at $5 million a year. We should ban dividends. We should ban buybacks. We should force them to spend money to deliver on their promises and on their capacities. And then after that says we're going to spend another $500 billion in the defense budget. And then again on Friday, again, coming after this affordability thing, talking about capping credit card rates at 10%, something he can't do unilaterally, but showing his desire to arrest these polling declines. I think he's going to start acting a little bit more like an introducer of volatility. And I think the days of just every day come in, sell volatility, and that bid we've seen, that passive bid, that systematic bid from lower volatility, I think it's going to start to wane in the coming weeks here as the president gets a little bit more aggressive. Sara, you mentioned earlier you don't really necessarily look at VIX cross asset in that dynamic. But should we start to see a bottoming, process here in VIX and a little bit more chaos and a little bit more Trump tweet dynamics in the middle of the day, how would that change how you think about the tape, how you think about sizing, how you think about positioning? Curious how an interjection of Trump volatility might shift the dynamic here for the early part of the year.
I mean, I'm all about it. Because the VIX is super low right now. We closed at 14.5. Like, that's terribly boring for us. Like, we like it in the mid 20s at least. Like, that's kind of like prime time. So we would love it if we got a big spike, but it's just not what it looks like is gonna happen. According to the charts, obviously tweets are different, news can happen at any time, and you do have to be aware of that and protect yourself and have your stops in and all that. But as far as the charts look, it looks like VIX is gonna take out last year's lows, which is boring. But
yeah, no, I mean
that's
I've
right
seen
there.
Yeah, I've seen some pretty. There's a bunch of interesting seasonal VIX charts making the rounds about VIX making basically a low in the second week and third week of January, and then going on an 8-week bender into the and making highs into the middle of March. There's been countless times over the course of the last several years where we've seen markets kind of peak out in the second half January, early part of February, and then have decent moves lower into March expiry.
That's what I'm waiting for.
I would love that.
Yeah, I mean, we'll see. That's kind of how seasonals didn't necessarily work out last year, but let's see how that chart dynamic plays out. But Pax, I was curious, how would you think about an environment where the president is getting a little more active, introducing some volatility? What does that mean for you? What does that mean for sizing? What does that mean for your outlook?
I like volatility, and I'll when we're volatile, I'll start off small and size up along the way. I mean, that's always what I like to do. In markets with low volatility and a little bit more clear, a clear directional move, then I'll start off bigger and peel them off. But in volatile moves, I'll start off smaller and look. As soon as I get a trade on, my first thought is, where am I taking profit on it, and where am I adding? I already know. If I sell 70s. If I sell 7,000, seven. If I sell 7,000s in the S&P, and they go 99 offer, 69.99 offer, I'm going to put a scratch stop in. So that's what I mean by getting a trade on. As soon as I do it on Fridays, as soon as I get the trade on and the market protects me, all right, good. My scratch stop is in, can't lose money. Now, where am I going to take profit, and where am I going to add to them, which are usually the same places? And that's what I'm looking to do, and so in busier markets, when we have an ATR in the S&P of greater than 50, then I'm going to start to size down out of the opening range, because it's a lot choppier. Bigger ATRs, market's a lot choppier, and then I'm going to size up along the way. I love volatility, and I don't care about the why of things. I just care that they're moving. And when they're moving, I've got a plan, I've got levels, I've got rotations, I'm going to take profit at them, and I'm going to add to them. So I'm looking forward to that, and my opinion is that, I mean, we can base here, we can rally up to 71.87 and just kind of, it'll be a back and forth sort of a reluctant rally, and then for whatever reason, late February, we start to sell off a bit. And then March, it'll be busy. We had, we had last year, we kind of did, we sold off like that. It was a little bit earlier in February with the taper
February
stuff.
to April.
Yeah, right. Right. And it was great. And then May, we started that massive rally. So who knows what we're going to get, It's going to be fun. I know you're looking forward to it, Sarah.
Yeah, I really am. I prefer to play downside. I know you do too.
Yeah, it's easier to size up for me, and it's easier for me to size up. It's easier for me to go from a 4 lot to a 40 lot, or more or less, whatever. It's easier to do that in down markets because there's greater momentum, and we are both momentum breakout traders. So when we have breakout, and when we have breakouts, below areas on the downside. What's the old adage that everybody uses? The market takes the elevator or the escalator up and the elevator down.
Airs up, elevator down.
Yeah. So when we start selling off, man, I mean, have any of you guys ever had, not you guys on the panel, but, any of you guys in the chat ever sold sold 70s and the market just goes, like, holy shit, it's 90 offer, 80 offer, 70 offer. You know how that goes? And when that happens, you're sitting there, you got a good trade on and you cover maybe a little bit too fast and it keeps going. Any price along the way were prices that you could have added to your trade on, but you've got a good position on, and you don't want to screw up that position. Traders that ultimately find themselves financially free have that trade on, and they're looking to exploit it. I've got 10 points into this trade. I wonder if I can use 2 or 3 of those points to try to make another 20. Oh, well, now I got 40, 50 points into this trade. I wonder if I can use 5 to make another 50. And before you know it, you've just added to your size without adding to your risk, because you're protecting your profit on the upside, with upside stops, and you stay out of the way of the market and you let the market do the work for you.
Mm-hmm.
Every day should feel like you're cheating life.
Yeah.
I'm going to get you a shirt that says that.
Definitely. We had some good ones on Friday too, Pax. Was it CCFF? I think is a shirt we want to make, and the other one is both my wife and the market are always right.
Yeah.
I think we're gonna make that. We're gonna get those shirts. Are gonna get made up. But 40 minutes into the Sunday Open, and things have kind of quieted down a bit with S&P right at 7,000, or minis right at 7,000. Down 5 handles. NASDAQ 25,902 down 36 handles. The dollar again is a little bit stronger. Oil up 85 basis points, 50 cents to 59.61. Gold, precious. We've been talking about it for weeks. It continues to be strong. I wanted to shift a little bit to bonds. We haven't touched on bonds yet, and maybe we could throw up like a UB chart or something like that. But a little bit weaker here. We've seen pressure on long end yields, with yields moving higher. It's been largely foreign driven in Japan and Europe, and even the U.S. long end with 30-year yields a little bit above 4.8%. But I'm curious. We like to look at. I know Pax, you typically like to look at the UBs and the long end just to get a sense for where we are, and if I think we were talking about Friday about some levels of potential breakdown that might make you a little bit more concerned, or about the equity tape broadly. But what are you thinking here on the long end?
We're the 30-year open the year at, I think, 115.02. Oh boy, I better look. I don't want to guess. Oh, 115.13. So see, I'm glad I looked. 115.13 is the yearly opening print. So we're above that. The quarterly pivot is 115.25. And we're just below that. So between 115.13 and 115.25, I'm going to be flat. I'm going to use that sort of like for those of you that know how I use the opening ranges in the indices. I will consider that the opening range for the 30-year bonds, 115.13 to 115.25. So if the market is between those levels, I don't want it. If we're above 25, I'll get long. 115.25, I will get long. I will seek to do that tomorrow too. If we are below 115.13, then I'll get short. If we continue to churn in this general area, I don't want anything to do with it. So anywhere between those levels, you just want to stay short and let the market, again, just let the market instruct you. Let the market instruct you and tell you what to do in the market. Anthony's got a great line. Crudele's got a great line that I've lifted, but since he might be listening, I've got to give him credit on it. Most traders force their trades. Great traders are forced to trade. But when you do take that trade and that trade works, where am I taking profit and where am I adding? So, then underneath 115, I'm sorry, I'm dyslexic. I get the numbers in my mind. Underneath 115.13, then we should trade down to, we got that last week's low, but underneath there, that huge double triple bottom at 114.17. If we, so below 13, I want to be short to 17. What was last week's low? 26. So we got to take out 26. So underneath 115.13, then it's down to 114.26. I'll take profit in front of that, and I'll add underneath it. That takes us down to 114.17. I'll take profit under there, and underneath 114.17, I will sell as my father used to say, I will sell the bejesus out of it. Underneath 114.17, it is going to 113, lower 113 area, and then down to 110.01. That big ass bottom from last year.
Yeah. I think what I've been saying and seeing is that we've seen bond volatility has gotten smashed alongside kind of all volatility, really. Yes. But I think the equity market is very comfortable not thinking about fixed income, broadly speaking.
Yeah.
And so as long as bonds and fixed income is in a tight range, it really doesn't bother anybody. And the MOVE index has moved down a ton over the course of the last several months. And so as long as yields don't really do a lot in either direction, I think the equity market can kind of beat to its own drum. But if we were to see a rate of change acceleration to the downside in yields or even to the upside in yields, I think equities would start to care, right? If we saw a breakout higher in yields, lower in price, I think equities would notice that and become concerned. And on the flip side, if we saw a big rally in fixed income with yields moving materially lower, maybe indicative of an economy that is showing signs of further deterioration or geopolitical concerns or what have you, I think equity markets would notice that too in a negative way. And so it seems like again, it's this volatility component, right? We get, as long as we have smooth volatility, lower volatility, the ability to get systematic releveraging and passive flows into the markets continues. Nothing upsets the apple cart, and indices grind higher. And then within that, different sectors win and lose on different days. But broadly speaking, we have grind up tape. But once the volatility gets introduced, I feel like we're on a bit of a nice edge here, I think, in some degree. And Sara mentioned it, just the absolute level of the VIX being, reasonably low. And certainly low over the course, as looking back over, let's say, the last 18 months or so, we're definitely at the lower end of the range. And so if something were to spike that, whether it was, something from the president or geopolitically, I mean, the Ukraine-Russia stuff is still top of mind. Iran is still top of mind. Other areas, Taiwan, China, top of mind. So anything could pop out of that dynamic. I think if we were to get volatility events, and clearly we are moving into that seasonal window, which we talked about from a volatility perspective, where we get decent bid and fall, that could be something that leads to maybe some larger moves to the downside here. But for now, kind of quiet on that front. But, again, it's the big mover is precious. Again, this evening. But I'm still kind of, in a way shocked, right? We come in every Sunday and looking for larger moves in equities, and then winds up not delivering them. But precious metals has been delivering big moves and mostly higher for months now. And to start 2026, again, here we're, moving higher. That's an interest. I don't know. You made me think of some things that are interesting to me that I need to do some work on. I'm behind on a lot of things as I explained earlier, but Ira Harris, who's a shared mentor of both Crudele and I, had come up with years ago the idea of the S&P bond spread. And I tracked the S&P bond spread. My mentor, Judd Hirschberg, also, does too, and taught me that a long time ago. So, there also the gold bond or the gold S&P spread and also the silver, I think S&P spread are two very important things. You got gold and silver much stronger than the S&P has been, but what about, what is going to move the indices? What will move the indices? Will it be a continued move up in gold and silver? I don't think so. I think it would be a bigger move on the long end of the curve, or actually, a continued flattening of the curve too. I don't know what is going to be the catalyst from a capital flow, sort of a aspect of it. I don't know what's going to move the indices. I don't have a real solid feel for any of this. So no news, to your point, Craig, is good news, right? No news is positive news. No news means that we should reluctantly continue this rally.
like Pharm was saying earlier.
Yeah. Well, look, no news means that volatility continues to remain under pressure. And we know there is a very large cohort of capital that trades based on volatility, whether it's volatility control funds, CTAs, and the like, and they're not max positioned. And so if volatility continues to grind lower, we're going to get that systematic re-leveraging over the course of the next weeks and months, and you just kind of get up and move and move and move. And so part of the reason why last year's moved lower in the first quarter and into the April Liberation Day stuff was so impactful is because we were at max leverage kind of into the inauguration and into January. We had max positioning across CTAs, vol control funds, risk parity funds. We don't really have that. We're more in the 60 to 70% camp right now. And so we may not get back to max, but clearly if we're going to do this geopolitical dancing around the world, we may not get back to that. But to the extent that the administration does dial this back and we get more vol selling, we have that. That's how I think we would make a big move higher, let's say in the course of the next 1 to 2 months, and be that systematic re-leveraging from those types of funds. I'm not envisioning it, but it's certainly something that that can happen. I think it's interesting, from that perspective. So,
what would be the reason for the funds to reestablish those positions? I mean, up here,
no, look, a lot of those funds are just math, right? I mean, the vol control funds are just math, and so as 1 month volatility moves down below 3 month volatility, they can leverage up even further, right? And so it's just and the capital can move into those spaces, and we get the the zero data expiry types of dynamics that are in place that with the vol selling. So and CTAs are chasing trend, and so they're seeing the trend, they're seeing volatility, they can leverage up their positions, and that's I think that's just a dynamic that doesn't necessarily need to be a catalyst. It's just lack of catalyst that creates that vol selling. We'll see. I mean, it does seem to me that the administration is starting to become a volatility introduction agent, whether it's in the markets by sector or geopolitically. And so I'd find it hard to believe that we would go into that kind of dynamic, but look, anything's possible here. So we are about 10 minutes left. If you are new to the show, again, please subscribe to the channel so you can communicate with us and we can answer questions. I think we had an interesting poll up. What are you most bullish on? I didn't create the poll. I would have just, what are you most bearish on? But what are you most bullish on? 30% of you are thinking indices for the week. This is for the week. 29% gold, 18% silver, 24% crude. So a reasonably mixed bag there, but a nice bullishness again to start the week. But silver and gold are clearly at the foreground here again, and crude up 1% to 59.71. Gold's up a little over 1%, 45.51. Indices are quiet. We're dancing around the 7,000. We are largely in a neutral to modestly positive gamma position for S&Ps right now. Into an expiry week. And so, probably won't see, we could be, and we're at 7,000, big round numbers. So maybe we'll have another one of these kind of pin weeks where a ton of intra-sector and intercompany rotations and not a lot of index movement. I think that's a reasonable possibility as we move through the week as well.
Won't be the equities. It's going to be, it'll be the metals or it'll be crude. Sorry.
Well, crude just took out last week's highs, so it hit the 4-hour target and took out last week's highs. I expect, like I said, crude to go up this week.
Yeah, I'm with you, Sarah. Last time I was with you was $55.10, and that ended up being a great trade.
Yeah, that was 8.5% lower. That's what this big blue line is. I'm measuring from there to where we are now.
What did Anthony just say in the chat? Nice seeing Pax Tanner. Oh, yeah. I thought you were accusing me of using Tanner. That would have pissed me off. Yeah, I'm about as tan as I can get, Ant.
Pretty tan for a white guy.
Oh yeah.
It's been 53 minutes, and what's interesting is I don't think we mentioned the Fed at all for 53 minutes.
Who are they?
Which I think is interesting, right? I think I did mention that the odds of January have moved down materially, but for the most part. The Fed has been kind of relegated to the background here, which I think is interesting and notable. And there's certainly been times over the course of the past months and quarters where the Fed has been really the only thing that anybody talks about. But we will eventually get the administration's new Fed chair decision. Secretary Bessent said that Trump will make that decision likely either before he leaves for Davos or after Davos, which is in, I think, a little less than 2 weeks. So by the end of the month, we will have an announcement on a new Fed chair, which will be interesting. The rate cut expectations really aren't as aggressive as I think I would have thought. Trump obviously wants rates materially lower, and the market's not really pricing that in. What is interesting and certainly annoying is, as I'm looking at the calendar right now, I think we have 15 different Fed speakers this week. So there will be a headline bonanza. Powell is not speaking, but Williams does speak tomorrow night, and he's often seen as a mouthpiece for the Fed chair. Stephen Myron also speaks a little later this week. And really, most of them are speaking. And then on Friday, we finally do go into a blackout period, which is great. So we get 1 week of nonsense, and then we go quiet for 2 weeks into the end of the month's Fed meeting. On the macro side, as I mentioned earlier, CPI on Tuesday could be interesting. I think the expectations are for a sanguine, weaker than expected inflation print. So if we are down at 2.7% year over year and 0.3% month over month, I think most people, given the data and the way that they missed the October data, are expecting that number to come in light anyway. So if we got a big, strong figure there, potentially that could be a little bit of a disruption or a hiccup for the bond market, maybe selling off, and what that might mean for equities as we price out more Fed cuts. But uncertain that that's going to really be a market mover. And then again on Wednesday morning at 10 o'clock is the potential for the Supreme Court ruling on tariffs. We touched on that a fair bit during the week and last week. Who knows, right? I mean, this is something that the administration clearly wants to keep, is their ability to tariff kind of unabated. And so if the Supreme Court comes in and says that that's no longer to be the case, we could get a reasonable reaction in the bond market, particularly at the long end, especially if remedies and come out where the court says that the government has to pay that money back in an expedited period of time. I mean, we'll see. It's not necessarily expected, but if that were to happen, I think the bond market would notice. And last week, many of the best performing themes were baskets of stocks that would benefit from tariffs going away. So clearly, the equity market is starting to move in the direction of the tariffs going away, or certainly be lowered. And so we'll see. Could get that as early as Wednesday morning. Friday is expiry, earnings all week for the banks, and then next week we really kick off some tech earnings, and the big tech guys don't really report until the end of January. So nothing too quick on that front. But in the last couple of minutes here, guys, any kind of closing thoughts? Any high conviction trades you're thinking for the week? Anything you're specifically looking at? Pharm, I'll start with you. We haven't had a Pharmism really to kick off the week, and I know Chat would really appreciate one, maybe to I don't know not to put you on the spot there, but if you got something for us, I would love to hear it.
I told the chat earlier when we started the show the same thing that I tell my wife: be prepared to be disappointed. Today, I'm a little tired. I'm a little bit off. I just don't have it. But on a serious note, the one thing I would add here is something that Pacifier 1929 in chat said, possibly the smartest thing I've ever read in my entire life. He knows why I'm saying that. This is kind of an inside joke. I think the market told us what it's worried about on Friday, and that was clearly the Supreme Court decision, because what happened after it was delayed was, volatility was absolutely demolished. Absolutely demolished. So we do have to ask ourselves, again, very, very good buyer on the tape. So I take nothing away. Very, very good buyer in the tape. Was that just a play, knowing that this was coming? I don't know, but certainly much of this move on Friday was a lot of volatility crush. So was all this move volatility crush? No, probably not, but was maybe a fair amount of it. And could it therefore be unraveled a bit? Because, it really was stepped on. You have to keep in mind that, like, NFP came out, it was received very well, right? We get a bullish reaction, completely stepped on. Completely stepped on. Make new low a day. That's when Big Boy stepped in and did some trapping in the 60s. And then we got this massive lift on that volatility crush. So, I would expect that traders are probably like short volatility for Monday and Tuesday and long volatility for Wednesday and Thursday, maybe, because of the potential ruling. So, if there is anything that comes into play on Monday and Tuesday that gets volatility moving, you could find some stuck traders. That's just a typical trade that they will do. Volatility calendar spread trades, even like in short duration. So like how much of this move was just volatility crush, and how many willing initiative buyers do we really have up here? And so like we'll find out. Like, I mean, if this thing starts giving back 69.69 basically, I would say it's going to look a little bit iffy. It's going to put a lot of pressure on like the lone bull on the tape who was a psychopath. Don't get me wrong, this guy was like insane. But I mean, if he's not there anymore, then there's potential for trouble. So I don't think you really want to see this bleed out too much more. 86.5 to 88 protects sort of a potential dip below this 94. So I think we can hold there. I don't think you want to see 66 offered. Definitely coming back down to 52. And then you're risking like effectively last week's low. Like it's not that far away because volatility has been suppressed and has been so narrow. So if a good part of this move was just effectively a short squeeze driven by volatility crush, then maybe it gives some of that back. So I just think we have to keep that in the back of our minds for this week. Yep. Sorry, I rambled.
No, makes sense. And you took us to the top of the hour, which is great. So, but no, look, the last look here as we kind of close out the session. S&P 69.96. NASDAQ down 55, handles 25,882. Gold and silver strong. Oil up 35 cents. Dollar a little bit stronger. Bonds kind of quiet. This has been the Sunday Open. Guys, thanks again for joining us. Really appreciate everybody's time. And we will be back live tomorrow morning at 8. Deli is back. Tracy is back. I'll be in studio. Everyone's back in the saddle for the second full trading week of the year. Thanks again.
Hey, Craig. Craig, what guests do we have this week?
That's a good. I know tomorrow we have Chris Martinson, who's great.
That'll be a good
I think
one.
Everybody should, and timely too, given everything that's going on with the state of the country. It'll be great to hear from Chris. So I know he's coming on. I don't know what the rest of the week looks like, but definitely join us tomorrow with Chris.
Yeah.
That'll be great. So thanks, guys, and we'll see you in chat. Awesome.
See you all later. Have a great week.
Bye.
Trade them up.